Well, I want to thank everyone for joining me here today. I'm live. I'm Brett Caviness with the Caviness Group at Compass. I'm so glad to have so many familiar faces here and others that I might not be so familiar with. So I just wanted to say welcome to everyone. Today we're going to be talking about the state of the market. I definitely want to get to questions that you have also. So let's get started. Of course, most of you I do know, so hello. Those of you that I am not as familiar with, feel free to visit me online at thecavennessgroup.com for more information. The gist of it is, of course, I've been helping you as my buyers and sellers for over the last 10 years now. So glad to be here to be discussing this. I know a lot of people have questions, especially right now with so much going on. So today we're going to be talking about, what's going on with the market today, but still a lot of things to cover. One of the big things is, how it applies for you. Specifically, if you're thinking of selling a home or buying. Today, we're going to go by really quick, a general overview for everyone, specifically if you are somebody who is thinking of buying or selling. So I want to welcome you to join me for specific webinars coming up on Friday, May 8th. We'll be discussing what to know before selling in 2020. So specifically the 5 things I think every seller needs to know before selling now that the market has changed a bit. Also, if you're a buyer thinking of buying here in 2020 and want to make sure that you're not overpaying, join me for that webinar Friday, May 14th. So that'll be on both of those at 4 p.m. on Fridays. So I want to see you there and be able to tackle even more questions. So today we're going to be discussing, where have we been leading up to kind of shelter in place time and the current sort of outbreak situation. Where are we since shelter in place took effect? What kind of effects has it had on our marketplace? And let's discuss, based on that information, a little bit about maybe where we are going. So those are the things that we're going to be talking about primarily here. So questions, I want you to think about questions you have as we go. Throw those into the question box. And I'll be answering as many as I can here towards the end. We're going to spend, hopefully get you out of here by 3:30. I want this to be quick and informative. If I don't get to everything, you can always text me or email me also. So be sure to throw in your questions so I can answer those later on. So where have we been? So leading up to shelter in place time, taking a look here since 1990, of course, we can see the big subprime bubble that burst prior to 2008, which is really an economic and a housing crisis at that time. We've been obviously pretty much steadily climbing since then. You can see here on most of the charts that I would be able to pull for you that we had a most recent peak, which a lot of people don't realize. That kind of most recent peak took place in about the summer of 2018. And last year, we were all really talking and seeing that 2019 was really kind of a rebalancing period with prices seemed to climb so quickly, so fast in 2018. I think consumers were really hesitant and worried about what that might mean for them. So we saw an easing in terms of demand in 2019, but that all really shifted as we moved into 2020. I can tell you that the market was very, very strong. The first quarter of 2020, you can see that here. We're looking at medium house prices in San Mateo County. And so you can see on the far right there, we jumped right up again for quarter 1 of 2020. That takes us through March. So again, that's before shelter in place took place. And again, we look at Santa Clara County, we see some consistencies. Q1, quarter 1 of 2020 was significantly higher, a much larger jump than we saw quarter 1 of 2019. So we were really kind of off to the races. We were looking at packed open houses, multiple offers, properties selling in a matter of days. And that had all really slowed in 2019, but sort of as soon as the clock struck 2020, it seemed like the pace kicked right back up again. So if we look at in single family homes, so I'm looking mostly in single family homes right now, in March 2020 compared to a year ago, March 2019, sales prices in March, again, these are properties that went into contract back in, would have been February, closed in March. These homes sold for 14% more in terms of average price per square foot than they were selling for back in 2019. Santa Clara County up 6% from where they were in 2019. So again, a nice generous jump in terms of prices as we moved into March. Obviously that all changed by mid-March when shelter in place went into effect. And so we have seen many changes since then. So let's look at where we have been since shelter in place took effect. So what we're looking at here is TFT means transactions that fell through. What does that mean? So that means properties that were already in contract that canceled. That could have been on part of the buyer or the seller or both, but they decided to cancel the transactions. So in blue, that's looking at numbers from 2020. And so we see that once shelter in place took effect, we saw lots of people that were scared. They panicked for a few days. People were backing out of contracts, trying to figure out what was next. Obviously, we were all unsure with where we would be headed. So at that time, we saw many people pulling out of the marketplace and canceling their contracts. You can see, though, on a daily rate since then, we've really been shifting downward. So much more confidence building since that period. The first few days, I know, of shelter in place was really just fielding questions from current clients and people that were thinking of buying or selling in the near term in terms of what it might mean for them. So kind of calming fears, discussing potential outcomes, learning more in terms of what our shelter in place is going to look like. And since then, again, we've seen some easing in terms of those fears or concerns a little bit. We can see that similarly in terms of the number of new homes listed for sale. So right now we're looking at a comparison between March 2019 and March 2020. And so what we look at here is once shelter in place took effect, you can see obviously that there are many fewer houses coming to market. As soon as shelter in place happened. Again, most sellers or many sellers said, wait, let's go on a pause here. But again, you see here that really only about a third less properties were coming to market. So still, about 75% of properties or 70% or so of properties were still being listed, coming to market. So still a lot of properties coming on the market for sale, even with the uncertainty in the market. What we find is that in any kind of economic or health climate, sellers have reasons to sell, and that continues whether someone has passed away, family needs have changed, divorce, death, anything like that. That leads to a need to sell a home, and that doesn't stop just because of a market or a health crisis. So we've seen people continuing to need to sell, and those properties have been coming on the market. And you can see ever so slightly here, and we're looking across kind of the Bay Area and MLS listings territory that they cover mostly the South Bay, Santa Clara, San Mateo County, some of the East Bay counties as well. We see a slight uptick gradually in terms of the number of properties coming on the market since shelter in place took effect. So now looking at April 2020, so all properties, single family homes that closed in April compared to March 2020, so 1 month. When we look at everything together, we see a slight decline in average sales prices. So in San Mateo County in April, homes were selling on an average per square foot basis about 4% less than they were just 1 month prior. And that's not typical. So especially in a spring market, we would expect that number would be in the positive for the month of April. Usually we see April as one of the months that really ticks up. So I would expect this to, in a normal market, be up anywhere from 5 to 7 or 8, maybe even up to about 10% more. So we have seen across the board in general, again, prices down about 4 to 6%. But what we know is that real estate is very, very local. So what's going on in Morgan Hill is not the same as what's going on in Cupertino. What's going on in Half Moon Bay is not the same as what's going on in Redwood City, for example. So again, that's why I'm zooming out here to look at numbers on a county basis, but we're going to talk more about a local level also. What I think is very interesting to point out is that homes are absolutely still selling. So what I did was I pulled here the number of homes that have went into contract since shelter in place. Some of them have already sold. So these are ones that are still either pending, so they've accepted an offer with no contingencies, or they have contingencies. So these are homes that have accepted offers since shelter in place took effect. So you can see here, San Carlos, 14 homes got sold. Redwood City, 30 homes went into contract. Menlo Park, 14. So again, these all went into contract since shelter in place went into effect. And what we know about these numbers is these figures are about half from what we would expect in a normal market. So about 50% less homes are going into contract than there were about 12 months ago, but still lots of activity. Properties are absolutely still selling, and people are still buying in today's market. Because I've heard a lot of people thinking, has the market completely stopped? And the reality is no. Again, some buyers still want to buy. They have reasons. They need more space, especially right now. People are sheltering in place. Maybe they want some yard space. They need an office, more room. Now more than ever, I think people are realizing the importance of home. And so their needs are coming to the forefront, and that's being shown here in terms of sales continuing. If we look at single family home prices since shelter in place, again, I kind of touched on this here. The number of homes listed for sale, so new listings that came on the market, has dropped by about 33%. And the number of homes that are being sold, so going into contract, has dropped about 50%. So that's a little bit of a difference there, obviously. So I think there are still more homes coming for sale than there are the number of buyers that are buying them right now. So I think we're seeing a little bit of an increase in inventory in comparison to the amount of demand that we've seen from buyers right now. And we'll discuss that a little bit further also. But again, properties are still coming on the market. People are still buying, but at a lower rate. So less properties are coming on the market, less properties are being sold. But in general, the demand continues. It's just a bit reduced. And we'll talk about that a little bit further. In terms of, we talk in the context of months of inventory. So to put it in a bit of a perspective. So in 2019, there would have been, let's say, 1 month of inventory. So if everybody bought properties that were out there, it would have taken 1 month to sell through that inventory in 2019. Right now, we have about 1.25 months of inventory. So again, just a little bit more inventory than we saw at the same time in 2019, but it's not dramatic. Again, we're not seeing a dramatic influx in properties that are just sitting on the market that aren't being sold. And so we'll see what that means in the future, and we can talk about that a little bit further. What I did do is I want to pull out, drill down as much as we can. I selected a few of the cities kind of here on the mid-lower peninsula to kind of look at those prices in particular. And I want to caveat all of this, right? Because when we're looking at counties, that gives us a kind of broader look. But when we drill down into cities, that's when we get into really the nitty-gritty. But the reality is that the data that I'm showing you here are very few sales. So the data set is very small, so it's very hard for us to come up with any exact assumptions on what this might mean for us. But I do want to go through that with you to take a look at what that looks like right now. In general, if we look at the first column here, I'm going to explain to you what we're looking at here. The first column is all sales in April 2020 compared to the month prior in March 2020. So in San Carlos, prices on average per square foot went up about 7% from March to April. In Redwood City, prices were up 2% from March to April. Menlo Park was down about 14%. But again, I put an asterisk here on Menlo Park because the interesting thing about Menlo Park is, and what's interesting about price per square foot is, you've got differentiators in terms of, and Alejandro, thank you. I see you've got a question here, and I'll get to your question also. So in Menlo Park, the interesting thing was smaller houses were sold in March than were sold in April. So in April, much larger houses were sold. So actually the average sales price was higher in April, but the average price per square foot was lower. And you see that's why the numbers are so much lower in April compared to March in Menlo Park, is because it's larger properties that were sold. So again, I would take these numbers for Menlo Park with a real grain of salt because the numbers, again, are larger properties that are being sold. So it's not exactly a one-to-one. Palo Alto was up about 2% from the previous month. Los Altos down about 5%, and Mountain View was up about 2%. So on the right side, next to that here, we're looking at 420 to 428. So what I wanted to do in this middle column here is try to look at only the properties that have sold since getting into contract after shelter in place. So that would be the buyers that went into contract knowing some of the uncertainty, knowing some of the current economic climate, and how does that impact the sales prices. So again, this column is only reflecting about a handful of sales per city, maybe up to about a dozen properties per city. So very few number of transactions that have closed so far. We're going to know a lot more in the coming weeks and coming months. So we're looking at a very small set of numbers here. But in San Carlos, prices were still up about 6%. Redwood City was flat, so stayed about the same from the month prior. Menlo Park was showing again lower, but that's because larger homes were sold. Palo Alto was down, but only by about 2%. Los Altos was down by about 2% in terms of price per square foot, and Mountain View was up by about 9%. And then on the right side, if we zoom out again, looking at all of April in 2020 compared to 1 year ago in 2019, San Carlos was flat at about a 0% change in terms of average square foot price. Redwood City up slightly at 3%. Menlo Park was showing down about 15%, but again, for whatever reason, larger homes were sold. Palo Alto was up about 5%, and Los Altos was down about 5%. Denise, I see you've got a question probably also, so I'll get to you as well. And then in Mountain View, we were down by about 1%. So again, what does this mean? To me, what I'm seeing here is that in our mid-peninsula here, we're seeing prices be relatively flat, right? So I think we're seeing some up and downward motions here, depending on the city, depending on the property, but with so few properties selling in this kind of finite time period since shelter in place went into effect, we're seeing very, very little change in terms of prices. Not to say that we're going to see a change in pressure on prices as we go forward, but what we've seen so far, properties that went into contract since shelter in place, we haven't seen a big change in their prices compared to where they were a year ago or even just a month ago. So we're seeing really a relatively flat market reacting to shelter in place going into effect. So if we again look at by county basis, single family homes, average price per square foot, 2020 to 2019, we're zooming out. San Mateo County as a whole was actually up by 6%, and Santa Clara County was down by about 7%. That's again zooming out by counties. Of course, there's a big difference when we're looking from city to city. So where are we headed with this information? What can we infer in terms of what we might be looking at for the rest of 2020? I didn't pack my magic ball, so I don't know exactly where things are going, but what I can tell you is what we do know and the data that we have right now. So based on the inventory out there right now, basically about 85% of properties are selling right now that are sitting on the market, versus about 1 year ago, 102% of properties were selling. How does that happen? Well, that happens because if we look at a period from March through April of this year and last year, that would include properties that were already on the market earlier in the year. So properties were selling very, very quickly in 2019 versus now properties are selling a little bit slower. So more inventory is kind of slowly increasing on the market with not as many selling. So a little bit more inventory is going unsold. And so it's even more important to be thinking about positioning in terms of properties if you're considering selling. And we're going to get to kind of my tips for that as we go. So I do think this may lead to an increase in supply, especially as shelter in place regulations have been relaxed a little bit. I'm going to touch on that. There were some changes released today that are going into effect starting next Monday. So I do think we're going to see an increase in supply. As shelter in place restrictions relax, I'm also expecting a little bit more demand for buyers as they get more comfortable going out there to see property, whether it be virtually or in person. I think we're going to see a little bit more activity there also. So we'll see what impact that has as we move forward. What has this meant for us in terms of real estate? What's been going on? So since shelter in place, it's really changed the way that we've done business, but we have been able to continue. So virtual showings of vacant homes is really the only way that properties have been able to be shown right now. No in-person showings have been allowed unless it was impossible to view them virtually through a virtual walkthrough or other medium. Photography, videography, that was allowed. A photographer was allowed to go in and take photos or video. That way people could see property virtually. Stagers were not able to go out and stage properties in the last month. Contractors had to come to a complete stop in our San Mateo, Santa Clara counties. Appraisers, they were on pause, so they delayed things a little bit. Right when shelter in place went into effect, appraisers couldn't come out to appraise properties. They didn't know what they could or could not do. Since then, they've been doing drive-by appraisals, or what they call desk reviews, looking on their computer, looking at data, photos, even getting walkthroughs from the owners. So appraisals have now resumed. And so timing hasn't changed very much in terms of close of escrows. We're still seeing about 30 days to 35 days in terms of how long it takes to get into contract to close escrow. We did have updates today. So the shelter in place order is being amended. So occupied homes are now going to be able to be shown starting on Monday if the owner is not there. Again, they do require that you try to see properties only virtually if possible, though. So that continues. All moves will be allowed. So moving was not allowed unless deemed essential for the last 30 days. So now they're allowing all residential moves to start up again starting on Monday. Construction and landscaping activities will now be allowed. They were asked to be paused or stopped for the last 30 days. Those are now going to be able to resume as long as they comply with shelter in place orders. So those can resume starting on Monday. So I think we're going to see a lot more properties coming to market. Properties that are occupied now, those are going to be coming on market. People that couldn't have projects finished, we're going to see those projects being finished in the next several weeks or months. And so we'll see more inventory coming on at that point as well. So I just pasted here, again, what comes exactly from the public health order here. They are requiring that all showings and appointments for residential real estate only be done virtually. unless it's impossible to do it virtually. And if it's impossible, then you can see property with only a maximum of 2 people at any one time, plus an agent. So that's going to continue. For occupied homes, those are going to be shown, if it's impossible to see it virtually, only if the homeowner or occupant is out of the property. So that is the big change. Is, up till now, we were not even able to get anybody in to see or get any vendors into any occupied properties. So landscape has changed. How has it changed? So virtual is now the norm. Virtual staging has become very popular because staging was not allowed. Open houses are out. No more public open houses, and I expect that to continue. There was no change in that in the new public health order. So I expected public open houses will probably be done with for the foreseeable future for at least several months. So we're going to see a lot more qualified people that are viewing properties, that are interested, that have already viewed them virtually online, that are making offers. Buyers getting more comfortable with virtual showings, contingencies, and more cooperation. So we're seeing more properties being sold with contingencies, and we're seeing more cooperation between sellers and buyers who understand this is a unique situation and they've got to work together in terms of timing and the unique aspects of the current marketplace. On a positive note here, I think we all kind of understand that our market is very different than most in the rest of the country. So kind of unfortunately, our buyers are not our typical service workers. Our buyers today are more high-tech workers or people in aerospace or healthcare. So their jobs might be at less risk. I do think there are going to certainly and have been some job losses already, and we'll continue to see that, but at a bit of a lesser rate. So this was an article posted by the Mercury News that expects that our area will fare a bit better than most in terms of the number of job loss. So I think that's going to help cushion our real estate market as we go forward. I do think maybe there'll be less buyers just because they'll be nervous about the health outcomes. They'll be nervous about their own personal economic outcomes, but I do expect the general overall demand to continue fairly strong. Again, I'll get to questions here in just a minute. I wanted to end here with a few opportunities I think that are out there for people that are considering selling. So there is reduced competition. Less properties are on the market right now. There is a lot of demand. The market remains, as we saw, relatively stable right now. We don't know where it's going. I would expect the market to continue relatively flat. If more inventory does come on the market and that really increases, I think we could see kind of a bit of a decline or curve down in terms of pricing. I don't think that's out of the question. So if you're thinking of selling, I would recommend trying to do so sooner rather than later, because right now we know that the market is still fairly stable, fairly strong, but where will it be in several months? Of course, we just don't know. I do think move-in ready homes that are renovated, that are clean, put together, painted, as move-in ready condition as possible, those are going to fare better because it's been difficult to get contractors out there and people in and out, and people don't want people in and out of their houses right now. So properties that are done, move-in ready, people can move in and shelter in place, those I think are going to do even better than others. Opportunities out there for buyers right now, still low interest rates, reduced competition, not as many buyers out there right now. You have more negotiability, especially in higher price segments. So we're seeing that in basically the 3 million plus range. Even if people were in contract at the 3 million plus mark, we are seeing people trying to renegotiate prices a bit, not always being accepted, but certainly in the high price points, there is more room for pricing movement, I would say. And in the lower price points, so in the mid 2 range to under 2 million range, that's still really the entry level market where the biggest buyer pool is. So not as much flexibility there. We are seeing many more buyers getting in a contract with contingencies though. So now may be the time, if you currently own a property and you're thinking of selling and buying at the same time, now could be the time to do that with a contingency. So that would mean you'd have the opportunity to sell your property maybe before moving, and it could be a bit of a more smooth or safe transaction. Maybe we'd be able to include an appraisal and or financing contingency. And these were really virtually unheard of if we look back just a few weeks ago. So great opportunities for buyers that might not have had the opportunity to move forward in that similar way in the past. So I want to remind you before I get to questions here, I'm here for you. If you want to know more how this applies specifically to you, text me, call me, email me. We can set up a conference call or a phone call and talk further. Again, register. I'll send these out after the meeting also for upcoming webinars that apply to sellers, one coming up on May 8th and one for buyers. Make sure you're not overpaying in today's market coming up on May 14th. So with that being said, I want to make sure that we're getting to your questions here. Let's see here. So let me know, type in any questions that you may have. I'm here to answer any questions. Denise, I know you said Santa Clara County, you don't see it. What we see in Santa Clara County here, let me show you. I'm going to share my screen again. So in Santa Clara County in general, across the board, again, this covers all of the entire county. If we're looking at 2020 compared to March 2020, it's down about 6%, but we're still about flat from where we were a month ago. And again, that really depends in terms of the condition of the property and the location. Properties that are in better shape and that are priced well, those are absolutely still selling and are probably about flat in terms of pricing. So we're not significantly up, we're definitely not significantly down either. So I'm seeing kind of a continuation in terms of pricing being mostly flat at this time. Does anybody have other questions? Thank you, Ryan. Thanks for being here. Let's see here. Richard, does this also apply to investment properties? So the interesting thing about investment properties, great question, Richard. So investment properties, as far as rental properties, that's not my focus or expertise, but what I can tell you is there are a lot of concerns right now because the state of California is very tenant friendly. So what we're hearing right now is if you have a tenant occupied property, it may be up to 6 months or longer where you may not be able to recoup rent from your tenant. So if you're thinking of buying an investment property right at this point, I would probably hold off on that because you may, especially if it's occupied. If it's vacant, but even if it's vacant, if you think through this here, if you have somebody that moves in, they might not even pay their rent for the next 5 or 6 months, and there's going to be nothing that you can do because the state of California has put a moratorium on consequences for tenants at this point. So it's a great question. So again, yeah, if I had multifamily properties, I'd be, or thinking of investing in multifamily right now, I'd be really thinking about the consequences of, having properties that are tenant occupied. Denise, this will affect the comps when selling now. So the good thing is, the comps that we look at are going to be in the past. So the past comps that we're looking at when we're looking at your, specific people's properties is still very, very favorable. And that's what people are using in general. People are looking at what did properties sell for previously and what's on the market today. And so right now the comps still look very, very favorable versus if we're waiting to sell a property, let's say 3 months from now or 6 months from now, if prices continue to slip, well, then as we look back, those prices get lower and lower and lower, and that's going to negatively affect prices. So again, right now is about the high point of where I would expect that our market's going to be for a while, so relatively stable. And again, I think prices will probably continue to be a bit flat or even decline subtly as we continue the next few weeks and months. Thank you, Alejandro. I really appreciate you being here. Got it. Let's see here. I'm concerned about the new tax reform law that now limits mortgage interest deduction at $750,000. Do you think this will change anytime? I don't know. I think a lot of changes are going to be on the back burner for right now. Just because with so much going on, I think the focus is definitely on COVID-19 and COVID-19 relief right now. So I don't know exactly how that tax reform would be affecting you. I would recommend reaching out to a CPA to understand how it might be affecting you. But the changes that we saw in terms of just claiming your own tax write-offs for homeowners, when that went into effect about a year ago, that definitely impacted our real estate market also. So we did see things kind of stabilize and tick off at that point. And so I think that's why in 2018 or in 2019, we saw some stabilization as some of those new tax reform laws took effect. So again, we're right here at about 3:30, everyone. I want to thank you all so very much. I know this is a lot of information thrown at you at once. I'm going to be sending out the links to register for a webinar if you're thinking of selling. I want you to know the 5 things I think every seller should be considering before they sell in 2020. I want to let you guys know about those. So you'll find that out in my webinar. Register for that. Also, if you're thinking of buying, let's make sure you're not overpaying in 2020. The strategies that I'm using with my buyers right now to make sure that you're not. Yes, there will be a copy of this webinar. I will send out you guys the link later today. It'll be posted on my YouTube page, on my website, but I'll also send you guys a link directly. And it'll also be shared on Facebook. So I'm gonna be sharing it out everywhere. So again, I wanna thank you all so much for being here. Please give me a call. I want you to know, above all, I am here to help you and here to assist you. Our work does not stop. We're constantly monitoring the market to make sure that we're up to date for all of you. Thank you, Ram. I really appreciate you being here. Ryan, thank you so much. I really, really appreciate all of you being here. Again, hope you guys have a great time. Reach out to me, text me, email me, call me. Let's talk about how this might affect you. I really appreciate all of you being here. Take care. I'm Brett Caviness with the Caviness Group at Compass. Have a good day, everyone. Thank you.